Welcome back to another episode of By Design, where we believe organizations should be run by design and not left to chance. Today, I'm here with my good friend and partner, Marty Osborne.
It's a hard word to say.
It is. And our good friend, Joe Mancini from Front Porch Venture Partners out of Raleigh. Today, we're going to get a little bit of his thoughts and insights in the venture capital world and what he looks for, mistakes, all that fun stuff like we usually do. Joe, thanks for taking the time and chatting with us today.
Absolutely. Yeah, it's great to see you guys.
Tell us a little bit about Front Porch Ventures.
Sure. So Front Porch, like you said, based in Raleigh. We are a hybrid venture fund. So we invest about half our capital into other venture funds and about half our capital directly into companies. Strong belief in the Southeast and a thesis around the region and its growth and the potential for great startup outcomes the next couple of decades. So we spend a lot of time DC to Miami, West to, but not including at this point, Texas. And great week in Greenville, scouting out a bunch of companies and connecting with folks in the ecosystem, and excited to see you guys.
Yeah.
So,
It's great.
It's a bummer it's not on the golf course. But
Yeah. Well, we thought about doing that in the golf cart. It's hard to get Andre following us around. But one thing you talk about is a hybrid. I thought that was unique because when we think about sort of venture capital, we don't think about other funds and so forth. So is that normal or is that different?
Unique. I mean, you'll find the structure, in other parts of the venture world. You'll find really big firms like Hamilton Lane with a similar strategy and a similar structure. Ours is unique in that it's focused on the region and really designed by design to to mimic the way that big institutions succeed in the asset class over the long term. And that's what they do is they basically scout out and find the best funds, build relationships with them, back them, and then leverage those relationships to get into great deals.
Nice. Yeah, one thing I was really interested reviewing your website is your investment strategies, not specifically like companies and that sort of thing, but the fact that two of your investment strategies are being focused and being purpose-built, which, again, sounds an awfully lot like by design. Can you just talk a little bit about why those two are two of your big investment strategies? Yeah,
purpose-built, is important to us. We spent a lot of time working through exactly how we wanted to build the firm and build each fund and build an approach to the market that we feel like could be lasting and, is purpose-built for the moment and purpose-built for what, our clients, our partners, our investors are looking for. And that was a long process, right? I mean, we talked to a lot of people, we tested a lot of things ourselves, we spent a lot of time trying to make sure that we got to the right, model, and we're really happy with it. And then we believe in focus. We believe in focus for ourselves, focus for our fund partners, focus for our founders that we back, minimizing distractions and just taking the time to get really good at something and then be really focused on it is key to each of these entities that we're backing succeeding over the long term. So
yeah, Marty's favorite word is intentionality.
Yeah, I think, every business, when we're not intentional, right, then we start to move in all different directions. And so it is interesting to see your focus, especially on the Southeast and that portfolio. What you guys are doing. It's kind of exciting for us being in the Southeast. So hopefully you're finding success here.
Yeah. I mean, it's our point of view is that the primordial ooze is finally coming together across the region. And, the benefit is, I drove down from Raleigh on Wednesday, I guess a couple days ago, right? I stopped through Charlotte on the way. It was 2 hours there. I saw some folks there, 2 hours, then down to Greenville, right? These places, I think as they've continued to grow, have become highly collaborative and have become better together. And the beauty of it is that they're not far, right? You can get in the car and drive from Birmingham to Atlanta or Atlanta to Greenville or Atlanta to Chattanooga or Raleigh to Richmond, right? So it's every ecosystem, I would say, is different, but is also similar. And we spend a lot of time just trying to get to know the right folks in every ecosystem and then try to connect them as best we can to opportunity and make sure that everybody sees kind of if they look left and right, they look north, south, east, and west, that there's interesting things going on across the region.
So one of the things when Marty and I decided to try to launch something was coming up with a name. Like to me, that was one of the hardest things we did. Front Porch Ventures sounds interesting. Can you kind of maybe walk us through how you came up with that name?
Yeah, it's funny. I'll give you the director's cut, which I'm not sure we've ever said like in a setting like this before.
So is this a by design exclusive?
This is a by design exclusive.
Nice.
So just for you guys. Yeah. But I mean, the original kind of the background story. Greg, Nick, and I met in grad school, and got to know each other well. And one of the things we did during school was we had done a mentored study with a professor whose research was all around startup ecosystems and how they emerge, how they succeed over the long term. And then also just on different kind of private market structures and how the private markets work. And we did all of our work for that project on one of our front porches. So, I mean, I still have the binder at the time it was Front Porch Capital. And we just really enjoyed sitting out, doing the work together, having good discussions. And, that was a long time ago. We kind of left that concept at the time to the side. But as we started to come back together after we each had careers doing other things, the name just was still present in our minds, right? And then I think as we built our brand, we want it to represent the way that we want to do business, which is, we want to be able to do it on the front porch.
Yeah.
Right? So,
the one thing that stood out to me in that is when I started looking at venture capital, I was always a bootstrap guy. You always hear these stories about how mean you guys are, right? How difficult, and they're out to get you. I know, and I was like, to me, the more I got in, and I always laughed when we first met. It was we were down at Venture Atlanta, and they had bus tours going around, and I think you were sitting there, and I just sat down, and we just started to strike up a conversation, and we started talking about football and ACC. You're a Virginia guy, I'm a Clemson guy, and it just always struck me because the persona or the thought was always like there's this battle and meanness, and I was just kind of struck by how nice you guys are. It just friendly and like it's not what we do to each other, but what we do for each other. So I don't know. Talk more about that. I think that's
I think anybody who's building something, there's great things are built when you can build great partnerships and recognize, the incentives that every party at the table has, and then just try your best to align those and be upfront about what your incentives are, and try to understand on the other sides of the table what those people's incentives are, and then try to figure out a way to do the work together, right? And that's the way we want to approach it. So
I know you're a sports fan, and it's NFL free agency, and you hear all these folks say, "Hey, it's not personal, it's business." Yeah. But really, I think that's incorrect. I think business is personal. People like to do business with people they like. If I can sit on the 100%. Front porch and drink a sweet tea, or in my case, an unsweet tea, I'm more likely, I want to do business with those folks. I don't want to do business where the phone rings and Marty has it, right? What kind of leader do you want to be? When that phone rings, do you want to answer it? And there's a lot of people that when they say business isn't personal, those are the folks probably when they show up on somebody's phone, people are like, oh, God.
Well, I mean, even the investor, right? If you call the company you invested in, do they want to answer from Joe or Nick or Greg, right? That's, to me, kind of a real telltale of your brand.
Yeah. Mm-hmm. Yeah, and that doesn't mean, for us, it doesn't mean you're not going to have tough conversations, but the best tough conversations happen from a foundation of trust. So, we just try to spend a lot of time building that trust with everybody we work with. And then, when we have to have a tough conversation, hopefully it lands because it's coming from a place of trusting each other, right?
Yeah. I mean, one of our core values was simplicity over complexity. Mm-hmm. And I think that sort of that front porch gives that feeling about simplicity. And again, it's you have an investment thesis, like you have to make money. Yeah. And so I think as you lay it out, that's where the relationship is. You're up front. Here's what we're investing in. Here's what happens. And if you can meet these criteria, then it works. It's when things, I think, aren't said is when people get in trouble.
Yeah, and our point of view is that venture just overall is way too mystical a space.
Yeah.
Like, what is it? How do you get it? Who does what? And, we've experienced this ourselves. We hear from founders all the time who experience it. And, we want our voice in the mix to be a voice that's trying to help demystify venture, right? And be upfront about what it is and what it isn't. Have honest conversations about whether, a company should be on the venture track or shouldn't. What it means to be on the venture track, and it's rocket fuel, right? You got to know what you're putting in the tank, but we want to have those conversations and be upfront about it.
Yeah.
And then one of the things we try to offer is just demystifying the process and acting as a resource for founders as they're exploring what to do.
And I'm going to put a shameless plug for your newsletter because I think it does a great job of kind of peeling back that curtain a little bit on some of this stuff. Because I always thought, my venture capital is the great and powerful Oz, but it's not the man behind the curtain. And you guys are literally trying to pull back that curtain and show folks that, hey, we're not this mystical creature controlling everything up here.
I appreciate that. The last one we said, the tagline at the top was something like, "This is and will always be an artisanal newsletter written by hand and not by AI."
Yeah.
Any hallucinations are our own. Right? And it's, we always say to people like, get a cup of coffee, sit down, try to digest this thing. We put a ton of effort into it and, try to bring a little bit of a perspective on the market as well as highlight, some of the investment decisions that we've made. With some context around them, and then always encourage people to reach out, ask questions, clarify, and it's been fun. We enjoy doing it, but it's purpose built. It is on purpose only quarterly.
Yeah.
Right, because it's the depth of information. We try to make pretty deep and offer a lot. So.
Yeah, the one I think was it December where you laid out your whole deal portfolio, the structure of it. I mean, I was kind of blown away just by how much depth was in there and transparency, but it also just said, this is how we do business.
Yeah. Yeah, and I think you only get, everybody's on every social media platform seeing, you see podcasts, you're seeing videos, you're seeing LinkedIn posts, everybody's just awash in information in their inboxes or in every app that they pull up on their phone. And we want to make the times when we have people's attention, we want to make meaningful and try to represent our brand and the way that we do business and try to share information that's useful and, kind of shoot that shot well, right?
Yeah.
So
we had that conversation because there's this sort of adage, just a pound. And I think it gets to the point where it gets boring and you're just like, same thing said. And so when you see somebody put something out that's intentional, that's at a certain interval, like it's almost refreshing.
Yeah. Yeah. I mean, that's what we want to be because and I think it's, I don't know, say what you want about it, but we've evolved into a 144 character world, right? So the vast majority of people are scrolling on these screens, not actually reading or digesting that much. It's intentional that we put more than 144 characters, way more, into the things that we put out because, we want to represent the depth of thought that we put into the business.
And since we're talking about that, where can folks go to subscribe so they get that newsletter?
Oh, sure. Yeah, just frontporchvp.com.
Yeah, and I highly recommend everybody do it. Even me, sometimes I'm reading it and it's like a foreign language, but it's really interesting stuff. So since I think most people are probably listening because they want to hear an investor's mindset around some things. So maybe let's start, like, what are some things you look for? You just said you went to Charlotte, you came here. What are some things you look for in an organization that even piques your interest into maybe deciding whether you either sit down with them or not?
Many things. I would say, at the start on the founder side, we spend a lot of time on founder market fit and making sure that the folks that we back are really, a good fit for the businesses that they're building. We like really focused businesses, going back to the theme of focus. So, we'll invest in a lot of vertical SaaS businesses, amongst others. But the reason that we focus on kind of the vertical aspect of it is twofold. One is that we feel like the SaaS world is evolving such that, these businesses can be built with much more intentionality for a specific space. Right. And that gives the people who are creating those businesses some the ability to charge a little more, right? Because they built something that isn't just, kind of vanilla and offered to a broad set of users and companies, but is, purpose built for the vertical. And we also just think the kind of the next wave of software is going to be built in that way, and that there's huge opportunity for founders who have really great, market fit, and are zoomed in, laser focused on a vertical, and then serve those customers really, really well.
One thing was, you see a lot of discussion, even in the SaaS world, like MVP, minimum viable product, and certain development tools, like just get something out there. But I always wonder, like, you sign a bunch of people up, but just you have this minimal viable product, but do you really have something to scale? Like, how do you make that evaluation, or where do you see companies in that, like, product life cycle? Can they get themselves in trouble trying to be too minimal signing people up, or is that a good way to go?
It's interesting. I mean, it's a great question. I think, we try to take it kind of opportunity by opportunity. I would say, if I was painting with like broad strokes, what we try to test for is, there are investors out there who have revenue thresholds for their investments, right? We don't. And we're instead really focused, if it's at the early stage with, an opportunity in a business that's, just securing their first customers and starting to grow, we want to understand, okay, how many customers are there? Who are they? And then what has their experience been? And have they yet had a moment where they could have decided not to pay for this and decided to continue paying for it? And then you can match that with, great founders typically have the next 10 or 15 things that they want to build in mind. And you have really in-depth discussions around that. And I think the good news around, the startup space right now is you can get an MVP out faster than ever, right? And from our perspective, we'll see companies at the pre-seed that are far more mature than they've ever been. But you always want to, you want to kind of not get ahead of your skis, right?
Yeah.
So, how much of the decision process to invest is not based on the product and based on the founder? So how much are you betting on the person versus how much are you betting on the product?
Yeah, I mean, it's both. Right, so we spend a lot of time on the product side. You have to be offering something that's differentiated, valuable. You have to demonstrate that you're building something that can continue to evolve and go, across the roadmap into something that matures and matures and matures over time. But it's also, I mean, creating a company is a long journey, right? And we spend a lot of time with founders trying to discern whether kind of what they're in that journey for, and try to make sure that they're ready for the long journey, because these are not 2 and 3 year
There's
journeys.
no overnight success.
No.
So it just reminded me of the call we got. Like, I've been at this 6 months and I'm just ready to get out.
No, it just takes a long time, right?
Yeah. I always laugh. I think I say this, and I just did a podcast where I think we're half crazy, because in the startup world, it's like pushing a train up the hill.
Yeah.
And you can get so far, and if you slip up, that thing is just going to run you over. And it's so hard to get there. And so that founder and their ability, like their why, probably cuts to, are they going to be there when the going gets tough?
Absolutely. And there are tough moments, right? And what we try to do is build a relationship with founders. More often we're partnering together with a lead investor when we come in on the direct side. So the lead, we believe in really good, strong lead investors, and have been fortunate to know many of them and back many of them here in the Southeast. And then we try to complement, it's lead investors, the founder is going to see them at their board meeting every quarter, right? And the board interaction is a certain type of interaction, right? We try to offer ourselves, because we're not, typically doing a ton of board work, as a resource for founders and founding teams, on happy Fridays and on frustrating Fridays.
Right.
So like, we're always happy to be the call when it's, hey, we had this great week. I want to tell you about it. Can we go get a beer if we're somewhere in town? Absolutely.
Yeah.
Right. Or, hey, I got a call one time, I need to fire somebody. I've never fired anybody before, and just, first off, this is not going to be a great experience for you, right? But walking and worse yet, for the person who's going to be impacted.
Right.
But here's the best way to do it in our experience, and trying to give them some coaching around topics like that. So
yeah, I mean, one thing we always said, you got to weigh in to buy in. And what happens is hopefully you get a board that's weighing in. Like sometimes they think a board meeting should be no discussion, no challenge. But that is actually the worst scenario. Like the best boards, and you might talk about this, are ones that challenge. Doesn't mean they're not doing the right thing. They just want to push that entrepreneur. Are you thinking about, and just almost their thought process?
Yeah. Yeah, and we, like I said, we don't do a ton of board work just given our model, but we certainly have seen and been on a variety of boards over time. And there are way too many sleepy boards out there. But I also think, it can cut the other way, where you have boards that are kind of, acting in a way that's beyond their remit, right? Yeah. So I think it's important for the founder and for everybody who's participating in the board to have a conversation around kind of who's going to do what, and then being in touch through all moments of the company on, are we value add to the founder, the founding team, and the company? So I think it's a fascinating topic, because many of our investments are happening in the first moment that a board is created, right? So
you don't really see that interaction yet.
It's interesting. There may have been advisors around the table who are giving some advice to the founder along the way. But the lead investor is going to create a board, right? It's going to be a real board, right? But then you're going to have the first board meeting, and then you're going to have the second. And as with anything, just having a check-in periodically of like how this is going, I think is important. And then as with any group of people working together, trying to understand what everybody's working styles and strengths are, such that those strengths can be maximized around the table.
Right.
Now, obviously, viewers of this YouTube channel know Marty and I are DISC and Working Genius evangelist. We believe in it. You just mentioned knowing people's work. Do you guys use assessments in your partnerships with these founders, or?
Well, our firms do. We typically will layer on an aspect of it as well. It's interesting. I mean, I find this stuff fascinating. Yeah. I was first introduced to it. Long ago, I was at Google, and Google had a tool called True Colors, and it was kind of the 4 colors version of Working Genius, which I think now is 6. And there's different versions of this thing, right? But I hadn't. It's funny. I was having a frustrating interaction with somebody that I was working with, and this guy, we were good friends. Like, we were very close, but from a working perspective, we had conflict, right? And we were just like, we were kind of like talking past each other. And only like the unlock for us was eventually doing this True Colors training, where we realized that I was naturally blue and gold, so people and lists, and he was naturally green and orange, so logic and action, right? And that we were just naturally we had different working styles. Right. And the unlock for us was that created a language for us to have a conversation about it. And once we had that, we were off to the races. Yep. Right. But prior to that, it was a super frustrating experience for both of us, because I would say, well, what about the people? And he would say, why do you care about the people? What about the logic? Where's the action? Right. And I would say, like, well, what about the list? And he's like, well, we had to take action. It was like this whole, circular thing. Right. And he's still, a great friend to this day. But until we had that experience, we weren't really all that good at working together.
And what's crazy is you both needed each other.
Absolutely.
Like, that's what's you get this friction, and you get this, they annoy me. But when you really unlock it, it's, oh my gosh, they help me bring out the best, and you're helping them bring out the best. And once you figure it out and have that framework and conversation, like you said, it's rocket fuel to the moon.
Yeah, and you feel, that for me was a career, like a professional light bulb moment, right? And you look back and you have some of those throughout your career. And, we've applied that at Front Porch with the dynamic between Greg Nicken and I, and trying to make sure that we have a language to talk to each other about the way that we work and make decisions. We strongly encourage and want to make sure that every fund we invest in has an approach to this. And we spend a lot of time trying to understand what the founder and the founding team look like from a working styles perspective as well.
It's funny. When we go into companies, there's always one or two that don't want to take it, because I don't know if they're scared of the results or don't want to know the results.
Well, they think there's a good or there's a pass fail, that that kind of stuff, but it's not. It really just opens up who you are. One of the things, Jim Collins wrote the book Good to Great, and I thought it was always interesting because he talked about getting the right person and the right seat on the bus.
Yep.
But he never really talked about what right is. And he did make one other comment that I thought was interesting, that said that getting these right people is more important than strategy, because if you get on the bus with the right people, you'll figure out where to go. And so talk a little bit more, like we've talked about people, but how that plays into your investment decisions and just looking at, the leadership team.
Yeah. Look, I mean, we're not at the phase that we invest in, these are not organized buses. Yeah. You're not like getting your
chaos,
ticket and you're in A1 and you're in like C14 and, I'm trying to think of like an airplane analogy, but I'll use a silly one. I mean, the airplanes are being built as they're flown, right? And, many of these teams, like, hey, you started off in row 1 and you're doing this type of work, but then, hey, we need to go do this type of work now, so you're going to go sit in row 4. And I think, it's interesting to watch companies that we've invested in as they've grown, because at a certain point, you do start to build in more rows and seats and tickets. I'm extending the analogy too far, but you get what I mean, right? They're going to be committees and policies and working groups and things like that. The best early stage companies have very little of that, because they're just chasing an opportunity, and they're filled with people who say, okay, fine, I'll go sit in row 2. I'll go sit in row 7, right? I am here to make sure that this bus accelerates. we could extend the analogy way too far, but I think anytime we feel like there's structure, it's interesting. Like, you will see companies that have too much of the, you go sit in this seat too early. Yeah. But then you'll also see companies that don't have enough of, hey, like everybody needs to you have to sit in a seat, right?
At least sit down. At least sit down. We're moving.
Exactly. Exactly.
Well, and that's my analogy is, I think the smaller you are, the earlier you are, the more important this assessments are. Because my analogy is always, if I'm in a canoe and you stand up, start jumping up and down, we're tipping over. Yeah. If we're on a cruise ship and you start jumping up and down, it's not even going to rock, right? So if you're just growing and we've got another row we need to fill, and you fill that with the wrong person, it just sets you back so much farther than, if you're a 300 person firm and you hire one bad one, you'll survive.
Yeah. I think it's a great analogy.
We believe so hard by design that in the early stages, like those hiring mistakes, we kind of talked about this last night, is people get money and the first thing is they want to run out and hire a bunch of people. Yeah. And it's such a mistake.
Yeah. And every of those decisions is, amongst the most important decisions you're going to make. And, the success rate in hiring just in general is low. Right. And you need to maximize your chances of success, because you're going to have, right now, the median Series A company has 13 employees. Right. So people will go raise around and they're going to try to go from having 5 or 6 employees to having maybe, 13. Right. And each of those hires have to be great hires. And then for those teams, if any of them are not, it's best for everybody if you move on from that person as quickly as you can and find the next person who's ready to go.
Marty, you mentioned it in the book, you mentioned it in the previous episode. What are founders really bad at?
We suck at hiring. Because because one is we don't want to take the time. Yeah. So we see somebody we like and we're like, bring them on. And then we realize they're not the right person or they're not the right fit. And then we're like, crap. And then we're nice people, so then we don't want to let them go. Yeah. So we put up with bad behavior, or we put up with bad performance. And so to me, building a process that sort of takes our gut out, that helps us, if we know we need a high tenacity person, then we can figure that out. If we need a more creative or a more galvanizing, like that's what those assessments just do for you so quickly.
Yep. And the best teams, you guys say this all the time, the best teams are made of a combination of working styles, right? With a language to talk about, navigate conflict and help maximize everybody's strengths at the table. Yeah. But it's interesting because it's not, you'll see, big companies hire hundreds and thousands of people, every year, and the margin for error is a little wider. Right. When you're at the early stage and you've gotten a relatively small amount of money and you have a relatively finite amount of time to make it work, like you've got to make those hires work.
There was a recent McKinsey study that came out that said 65% of all startups fail because of people or organizational issues. So it's not product issues. It's really the people, the processes,
So what's the one thing that we can't create more of? And it's time. And it used to kill me in our company is if we brought a salesperson in, I would lose a year because I didn't know if they were going to work out or not. By the time I get them trained, get them out in the field, a year goes by. And if it's a bad hire, I lost a year. And that's so hard in any startup.
Yeah. And people, these are small teams. People see when somebody's not a good fit.
Yep.
Right. And I think often when we'll see, the best founders take action on that quickly, and it will bring the rest of the team relief.
I was just going to point that out. It's amazing how sometimes people don't want to fire someone. Like the team will be upset. The team will be upset. Then when it happens, 3 or 4 people will come in and be like, "Thank you. I was having to cover their work, my work, the other work." They're like, "Thank God he's gone." Now let's switch. We've been talking a lot about people, but again, I know we want to dig into a little bit with you valuations, the valuation process, and that sort of thing. Can we get into that with you? And not specific deals or specific customers, but just in general, what is a valuation process when you go and look at a company? Like, how do you start to formulate what this company might be worth?
Yeah, it's interesting. I mean, we'll run our own process in general because we're not presenting term sheets nor leading deals, right? Another person in the market is setting the price and negotiating with the founder. The benefit to us is that we then get to take all that information and do our own work around it and try to figure out whether the valuation is something that we find compelling in terms of the overall risk reward setup of the deal itself. It's an interesting, the process for us is, it's an in-depth process to, Greg just does a fantastic job digging through every single term sheet, every single financial model, in terms of strengths, like he just does a fantastic job at digging through all of those things. We then will do a debrief together on what we found, ask a bunch of tough questions of each other, ask some questions of the founder and the founding team. And, the benefit of investing in the Southeast is that, nobody here yet, and maybe this will change over time, but nobody needs to chase or underwrite typically unicorn, decacorn IPOs in order for the investor, the founder, the founding team to succeed, right? So you're coming in typically at a valuation where you can look ahead and underwrite a great outcome for everybody involved that may or may not ever hit, the wire and hit the news. Right? We see that as a feature of the region for the most part, because we have a chance to invest at valuations that are, at a material discount to where you would see in other parts of the venture world.
Yeah, I guess one of the challenge always with valuations, and there's mixed bags because obviously owners want to give less away and take more money, but that sets a higher valuation than they can get. How do you, as you look at that, if there was any advice to somebody looking at taking venture of balancing valuations, equity for future rounds, that kind of stuff?
Yeah. It, in our approach and those of our fund partners, we want founders and founding teams to succeed, right? So it is a red flag for us if we feel like the founder and the founding team are being too diluted in a deal. Right. Like just again, going back to just aligning incentives around the table, we don't want that to be the case. There's also then the balancing act of how much money to take in against what the reasonable valuation is going to be. And you want to take in enough money to press through, with a little bit of a margin for error, the milestones that the company has in front of it. So we always start with, encouraging founders and founding teams to start with that. Right. As you're going to raise your next round, where are you trying to get? What's the next, set of milestones you're trying to achieve, and then work back from that. Right. How then are you going to get there? Starting with the market and the customer and the product, and then work back all the way through to eventually the sources of capital and how much you need.
Right.
It's as everything. This, it's a balancing act, right? And the best success stories, I think, in the region have done a good job of striking that balance, such that everybody's incentives are aligned around the table, and the company has enough, and appropriate funding to get the milestones, achieved that they want to achieve.
Yeah, I've seen some really good write-ups that sort of go through from pre-seed to whether it's angel investing, getting to A, B, C, and how that sort of dilution model looks. And it's kind of fascinating that sometimes they always say start with an end in mind. So can you sit down with an entrepreneur and say, yes, this is not the end all be all. This is just a start, and here's where you're going, so they understand that path.
Yeah.
Do you talk through that with people?
Yeah, of course. It's not a perfect crystal ball, I would say, but it's a good discussion, and it's the right thing to do, right? The reason I say it's not a perfect crystal ball is because the Series A, B, and C, kind of the later stage funding markets, have been pretty quiet the last couple of years.
Yeah.
And typically at the A, that's where investors are really keying in on a set of KPIs. And if you have met those KPIs, you get the meeting. And if you have not met those KPIs, you don't get the meeting.
Yeah, it's
right.
simple.
And I think founders often underestimate that leap, right? And you need to start practicing how to run your business that way early, not too early, but early enough such that you have great reps, managing what you measure, right, as you head towards the A. And then, as of late, the goalposts have changed a little bit at the A, right? People are looking for more revenue. And founders, founders have a tough job right now trying to make sure that they balance the money that they have in the bank and the runway and how they're investing it, trying to then hit that, Series A and B set of KPIs to get that next round of funding.
So one of the things I was going to say that we do at By Design, and when we work with clients, and Dale, you might want to share this. We've talked about it, but getting down to a strategic plan, and we do something called working, broken, missing. And what's fascinating about this is we basically go through this exercise. If it's working, you just keep doing it. We look at what's broken, what's missing, and we have the team pick 3 strategic. And it's so funny because we go back and forth and they want to pick 6 or 8. And what they don't realize is it's by design to pick 3 because we want to see over the next 90 days, can you actually execute on 3?
Yep.
And what's crazy is we work in the startup world, and I've done it, is we'll sit down and they'll pick 3, and a week later they're like, got 3 more and 3 new ones. And we're like, what about that? And I think what we're looking for is it's not so much what the 3 is, but can you actually execute on what you say you're going to do?
Yeah. I mean, we talk all the time about this. There's a say-do ratio, right? And, we're going to sit and try to understand what you're saying you're going to do. And, we don't want those lists to be super long.
We call it the relentless execution framework because in our experience, the ideas are there. They know what they need to do. They know where they need to go. They just don't have the framework to do it, which is why we do 3 every 90 days and just start checking them off. And if, to Marty's point, if you pick 3 easy ones, let's say, and you can't even check those off, then how are you going to meet these big milestones, KPIs, revenue numbers that you're going to have to hit? So that's where we see a lot of companies struggle. Is they know what milestones, they know what they need to do, but they struggle with the execution piece to get there. I don't know if you've seen that
the best founders that we see are both macro and micro managers. Micromanagers meaning that they have an ability to go incredibly deep on the business, and if they need to, and often they do, there's been the term thrown around, founder mode recently, right? They can be a micromanager of the business, right? And in the early days, step into just about every seat and push along every team member to hit the milestones that they want to hit. But they're also really great macro managers in the sense of like reminding everybody of the arc of the story, the arc of the journey, like where we're headed over the long term, right? And then striking that balance of, the big picture as well as the small picture. That's really hard, right? It's hard to find people who can do both and do both really well, but great founders do both well.
Yeah. I did a piece called TNT. It takes no talent. Like how many things do we see every day in business that really take no talent? Showing up. Doing what you say you're going to do, like being relentless and focused, that really doesn't take talent. It just takes focus. And so we start to look at, and I know I look at a lot of leaders, is not only how smart they are and everything else, but what are the things that are they doing every day that just don't take any talent, but they do it?
Yeah, it's interesting. We have a founder we invested in recently. just fantastic founder. And I went for a visit recently, and the team's in an office at a co-working space, and there's a big giant whiteboard, like the biggest whiteboard I've ever seen. It's huge. It was probably like 15 by 15 or something. I don't know where they got this thing. How they even got it in there, but it's huge. And on it, he must have had to like get up on a ladder to like draw this. But at the top of the thing, he's got like the arc of the journey, right? And here's the big milestones that we're chasing. And then underneath it, he's got all of the depth and detail around, how they're going to get there more tactically. And what was interesting to me, and what I thought was really cool about it, were two things. One was, it was clear that the team was referencing this. Like it was a part of their day-to-day to look at this. And then the other was that there were you could tell that there was different handwriting, right? So it wasn't all him, right? Writing down everything and commanding it out from the whiteboard, right? I mean, it was other people had participated in creating these lists. You could see some things are smudged, some things are, crossed out.
Yeah.
I took a picture of it because I'm like, we're gonna come back when this is a big giant business.
Yeah.
And you just make sure you save this because, knowing this guy, like, I'd bet most of what he wrote up there, he's gonna deliver on.
Yeah.
And it goes back to weighing in the buy-in, right? When you allow your team to weigh in and kind of co-author the journey, then they're bought in. And now that's not your milestone. You're telling me to hit that milestone. That's our milestone.
Absolutely.
And we have to go hit
Absolutely.
it. So that's a brilliant, I just took a note on that. That's a brilliant idea to get
Big giant whiteboards.
everyone.
Big whiteboard.
I think everyone needs a big giant whiteboard now.
Well, I mean, whiteboards just lay out vision, they lay out strategy. And I always said, why pencils have erasers?
Yeah.
It's because you can change. And I think in business, things are always going to be changing. I mean, none of us can predict what's going to happen. We can't predict the market up or down. We have to be ready to erase and not get tied to it. But we also have to remember where we're going.
Absolutely.
So people love to learn about mistakes. Like for some reason, Marty and I can put out a video about everything you should do. It gets some views. We put out what you don't do, and it gets hundreds of views. So
make mistakes all the time.
What are some mistakes you commonly see owners making, founders making?
Top three.
Oh, I thought it was going to be my own mistakes.
No,
Like
I'm
Joe's
sorry
like,
about
hey, we
that.
can start there
Yeah, right.
too. But
Joe's top
We should
three.
do that too. Turnabout's
all
fair
of our
play.
guests have never made a
Right.
mistake ever. They're always perfect. But when you're
that was the
when you're
case.
looking at businesses, when you're looking at founders, what are maybe some of the common mistakes you see being made out there?
The first thing that pops to mind, I wouldn't describe it as a mistake necessarily because I don't want it to sound like I'm kind of judging it. But I would say that I think maybe founders underestimate how important communication is and that it's okay to be open in your communication with people who have invested in you, right? And, sometimes it can take a little too long for investors and founders to get into a dynamic where that's the case. Right. And the earlier that we or anybody else who's invested hear about something that needs an extra hand, the faster we can, the faster that we can lend a hand. Right. So not necessarily a mistake, but I think it's this odd dynamic, right? Because everybody's pressed through the process of getting a deal done.
By the way, the more you say that, like that one's such a good one because what do you think probably the hardest thing sort of an entrepreneur does, right, is to be truthful on what's happening.
Right.
And if they're not communicating when the number gets bigger and bigger or they fall off, it gets harder and harder. So the earlier they let you into the window, but in some reasons our ego doesn't want us to say the truth. Like we're afraid to tell you the truth, but
and I think we get that. We try to cut through that with the folks that we invest in early, right? Which is just, we're going to be upfront and transparent about, what we're in this for and what we can reasonably help with and can't. And, we're hoping you can do the same, right?
Yeah.
And it's the best deals that we've ever done. Every month, without fail, we get an investor update.
Yeah.
And it's structured in a similar way and includes at the bottom a set of asks that are going out to the broader network. We read all those and, do our best to take action on what we're asked to do.
Is the issue more that, to Marty's point, they kind of want to present it as a very rosy picture and everything's fine and everything's good, and then you're like, oh gosh,
well, it's
no,
a tough
not.
seat. I mean,
Yeah.
it's an incredibly tough seat as a founder. I mean, you're selling the dream,
Yeah.
right?
Yeah.
You're trying to get other people to bring money to the table and believe in you over a long period of time. And anything that, and I've sat in that seat before. Anything that, any kind of derivation from the dream that you've sold, you can be hesitant to share because you don't want to stop selling the dream.
Yeah.
Right.
Yeah.
But I would think self-awareness, again, 25 years in the talent business, to me, the biggest predictor of success are people that are self-aware. Like if I know I'm struggling here and I can say it, and not just, hey, I'm struggling, help. It could be a, hey, I'm struggling and here's what I'm trying to do, but do you have any better ideas? To me, those would be the folks I'd want to bet on long term, not the ones that just, everything's great. It's the old meme with the dog sitting around and everything's on fire. And he's like, everything's fine. Everything's fine. We're cool. We're good.
I think that that piece, though, getting that understanding that there are going to be ups and downs, and almost my visual is you guys are in the boat with them. You're not on the sideline shooting cannonballs into them because you're not trying to sink their boat.
No,
we're
in
in
the
the boat. I need that boat afloat.
Right.
So
Totally.
So you're in it together. So the more open and honest, and to me, what you're looking at is, if I'm going to deliver bad news, my question is, are you doing everything you can? As opposed to, well, I didn't get out this email, or we're not doing the marketing campaign, we're not following up on our execution, then we have a different story than if you're doing the right things, but the market is taking longer or something's happening. Then
And we try not to overstate what we can help with, because we're on the boat right now. We'll switch from buses to boats, but we're on the boat. We're not trying to sink it. Exactly. And we got money in the boat, right? But we're also not. I mean, it's. I think there's memes around investors all the time around the people who are here to help, right? And we really do want to help, but we also try to be upfront and have honest conversations early around what we can help with versus what we can't help with, right? And that can run the range, but not overstate. We're in the boat, but it's
we're not going to
we will, of course we will, but it's a different dynamic in the sense of there's only, I don't know, I don't want to extend the analogy too far, but there's only so many types of oars we can grab to kind of row, right? The others are going to be for the team and the founder to row.
Do you guys have a sweet spot that you look for, size-wise, industry-wise, anything like that?
Yeah, it's pretty broad. So we invest in lead investors, and those funds invest across both tech and healthcare. And then, in general, we have a bias for early. So typically seed and Series A. We'll come in at the A for things that we, end markets and verticals that we feel like we want to see a little bit more risks de-risked, right? But on the kind of tech and software side, we'll typically come in at the seed.
Yeah. Are there any published statistics just on success or rates or whatever at seed or A? I mean, I know that's still a difficult time, and it's still a gamble. I mean, I guess, are there any published statistics on success or failures at the A level? Or
I mean, it's still, Carta has if folks don't follow all the Carta data insights newsletters and things like that, I'd encourage them to follow those. Carta has data on probably 3,000 venture firms, inclusive of all of the underlying investments within those firms, and publishes out regularly now quite a bit of data around success rates and graduation rates and things like that. We benchmark ourselves regularly against those things,
right?
And we think that's good. There's more. I would say there's more and more data in the industry these days than I think ever before, which is good for everybody, right? Because we can benchmark ourselves and also set expectations and understand with a founder. For instance, it takes 3 or 4 years typically to go raise your A, right? So let's make sure that we have enough money in the tank to get to that process, to get to that.
Yeah, I mean, it's kind of the beauty of it, right, wrong, is there is regulations around it. There is rules, so data is gathered. So it's very transparent. It's not like these deals are done in back rooms and closed doors. And I thought it was interesting through one of the accelerators. We have a venture guy does a talk on capital and money, and he really brings up one of the things just legally what you can say, or if I can't offer you a deal and then turn around and offer a different deal to the next guy. There are rules around this stuff, and so it is interesting for founders to understand that, to not get themselves in trouble.
Yeah, and we're always happy to trade notes on what those things are. Obviously, we're not lawyers, but we do have a good perch in the market on what market looks like and what what kind of the standard types of deals and structures look like, and we're always happy to chat through that with founders.
So, Joe, we've talked a lot about owner mistakes and organizational issues.
Now I get to share mine.
You
right?
made a comment that you thought I was asking you about yours. So I'm going to open the floor and what mistakes have you made, or what would you do differently if you were starting over today?
Yeah, it's funny. What's been rolling through my head in anticipating answering this question is the benefit that I have having worked with Greg and Nicken for so long, and that they know. I don't know if mistakes is the right word or not, but they certainly know what I am inclined to do or say and what my biases are, and can check me on it, right? Just like I can with them, right? And I think the three of us, just super complementary skill sets. And if you were out on the front porch hearing us, debate things and chat about things, you would hear them checking me on, hey, Joe, like you're doing the thing that you have a tendency to do, or you get swept away with this. Let's kind of check it a little bit. And I think that helps avoid some of the mistakes that I would otherwise make if I was doing this on my own.
Yeah, I think that number 2 position is so important. I know at Evoco, Marty and Steve just balanced each other out. It sounds like your partners balance. That balance and having different profiles, different ways of doing things, different ways of thinking, I think is very important.
I just trust in to me, when you build a leadership team or you're a founder with a partner, is having that trust to check each other. And I laugh because Dale and I were talking, and I'd bought a new house, and something came up, and I always believe in negotiation. You never give without getting, whatever it is, and it doesn't have to be big. And it was something small, and I was like plotting what I had to ask for. And Dale just looked at me and says, "Do you always have to win?"
It was like a rug or something.
It was a rug. I was like, I'm going to get this painting that he had.
Yeah, that's
and
what it
he
was.
just like, "Do you always have to win?" Like, oh, and I'm like, okay, I'm not going to ask for that.
Not
Like,
always. But most of the time.
Yeah, but I don't ask for enough. So again, I would give everything away. So it's a good balance with us as well. So as we wrap this up, one thing we do at By Design is we help owners figure out what's next for them personally, financially, in their organization. What's next for Joe and Front Porch Ventures?
We're on the road a lot, which we're happy to, it's like springtime conference season for us, which is a lot of fun. So we were at the Florida Venture Forum in Miami last week, obviously Greenville this week. Next week I'm in Winston at Winston Starts. The week after we have CED's Venture Connect in Raleigh. I'm going to catch spring break with my family after that. So we're going to head out. We do hike Zion, Grand Canyon, Sedona.
Nice.
And then we come back into it, and I think I'm in Birmingham, Charlotte, Nashville, Chattanooga,
Yikes.
back to Charlotte. So for anybody who's out there who's in these places, reach out. We'd love to say hi.
And how can they reach out to you? How do they connect with you and Front Porch Ventures?
Sure. Yeah, just either on LinkedIn or frontporchvp.com.
Awesome. Well, Marty, Joe, thank you guys so much for the time. I learned a lot just by listening. And
Yeah, one thing I want to say, congratulations. Joe has been elected to the board of Venture Atlanta.
wow.
That's a big honor to be on
Cool.
that board, and I think being part of that. So first off, congratulations.
Oh, thanks. I mean, Venture Atlanta has been a big part of Front Porch's growth over the years, and we've found a ton of companies there. We've had companies present there. And Greg, Nicken, and I have been involved in some way, shape, or form for since the inception of the firm. So I'm excited for it. It's fun.
That's great. And for the listeners out there, one exciting news we have for you all is there's now a link in the description of our videos where you can take a free disc profile. So you've heard us talk about it. You've seen the videos on it. Just click the link in the description. All you have to do is enter your name and email, and you're off into the assessment. And I look forward to seeing your results and hearing what you think about your results. So click on the link, take the assessment, and let us know what you think. Until next time, y'all.
See ya.
Thanks.
Thanks.